Welcome back to the channel, everyone. Today I want to talk about how Citadel has been creating fake accounts to spread FUD, and I also want to talk about the new NYSE investigation into Citadel securities. So stay tuned and let's make some money. And now I want to dive straight in with the key information. So, Edward Burchuk tweeted saying the hatred by short sellers and Citadel is so bad. They have to hide it under crap generated usernames and spit toxic FUD because they never covered their short positions while being linked to the same Citadel name. Somebody noticed all these fake randomly generated users on the Webull platform spreading FUD about AMC, such as how it's going down to $3 by the end of the year. Now this is just one of those individual accounts and it has over 1,000 posts, seemingly every single one of them is about AMC stock. Now if you go to this randomly generated user's account, we can actually see that this user is being followed by the one and only Citadel Securities. And on top of this, Edward tweeted saying many people have been getting this notification on Webull about how Citadel Securities is now following their Webull account. He said Citadel is literally spying on every single retail investor that they possibly can. I don't know what the point of it is, but we already won with buying and holding and buying those short dated in the money or at the money options. He said obviously we call the price of our bananas or our stock and they have to buy the bananas or the stock from us at our prices. And he said in case anyone thinks I'm joking, look at all the accounts that Citadel Securities follows with their follows ending in com. He said there's thousands upon thousands that are generated to spy on everyone in the community of Ken Griffin's Webull. So obviously you can see from these two screenshots there's tons and tons of randomly generated accounts that are obviously based on randomly generated email address names. And now the interesting thing is that this Citadel account on Webull is following 85,000 different users. So that's potentially up to 85,000 fake accounts that Citadel has created, and each individual one of those accounts could be potentially posting FUD thousands and thousands of times about AMC stock. Now obviously 85,000 accounts, all making 1,000 posts each, is potentially 85 million FUD comments that we've seen against AMC directly from Citadel Securities. Now I am going to speculate and say that this Citadel Securities account on Webull isn't owned by Ken Griffin himself. Obviously, Ken Griffin and Citadel Securities use Bank of America as their prime brokers and therefore place their trades directly with Bank of America. Citadel Securities is also a market maker and therefore literally makes markets and handles trades their very selves. And therefore, Citadel obviously have no real need to create a Webull account and trade using the Webull platform. Because obviously Citadel send trades directly to the New York Stock Exchange themselves or through their prime broker at Bank of America. And therefore it'd obviously be very unusual for Ken Griffin to create an account on Citadel Securities and deposit his entire $230 billion directly into Webull. Now even though this account may not be owned by Ken Griffin himself, it is still very expensive to create 85,000 fake accounts and make each of those individual fake accounts post 1,000 times about AMC. As I said, that's about 85 million fake posts that have been created by this one individual account on the Webull platform. And therefore somebody is spending a lot of money to make FUD posts on AMC and has been doing so over the last year. Now even though this account may not necessarily be owned by Ken Griffin himself, it wouldn't surprise me if it is owned by somebody deep within Citadel that's tasked with posting FUD about AMC. Now the fact there is this account out there named as Citadel with 85,000 fake accounts posting 1,000 times each, it just goes to show that these hedgies really are scared of AMC and they know they've lost. Now I also want to talk about this new investigation into Citadel from this article from the New York Mag titled "The NYSE is investigating why Shopify's stock freaked out." And guys, if you didn't already know, Moomoo and Futu have just officially announced that Futu does not accept payment for order flow, and therefore you don't have to worry about your trades going through sketchy dark pools or being given to Citadel. With Moomoo, you can currently get 5 free stocks worth up to $3,500 each, and a free guaranteed share on top of that worth around $20. So that's potentially up to $17,500 in free shares. All you have to do is sign up to Moomoo using the link in the description below and make your first deposit. Moomoo is also a brilliant commission-free trading platform that has tons of technical indicators and advanced charting tools. Moomoo publishes daily short selling data, position cost distribution, and much more. Moomoo is also incredibly easy to use and incredibly customizable and will help you to trade like a pro. So guys, be sure to sign up to Moomoo using the link in the description below to get all of those free shares. It says on March 18th, a weird thing happened at the New York Stock Exchange. It was near the end of the trading day, 1 minute before the closing bell had rung, when the price of Shopify stock went haywire, shooting up about $100 per share to $780 before immediately crashing down again in the post-market trading session. There was no sudden revelation about the business that would have caused it to jump. Wall Street was confused, Reddit was baffled. So what happened? It says that's what the New York Stock Exchange management is trying to find out. They've launched investigation into the matter, according to sources familiar with the probe. At the centre of it appears to be Citadel Securities, a trading firm owned by billionaire Ken Griffin. Citadel Securities is not a broker but a designated market maker, essentially a firm that oversees trading on certain stocks and is supposed to balance out those billions of trades that happen every single day. Now, it looks like Citigroup placed an order to buy 600,000 shares of Shopify, and instead of Citadel going out into the market and finding sellers for those buyers, Citadel decided to take the other side of the trade. Now, instead of Citadel selling those shares to Citigroup at the price that they wanted, Citadel forced the price of Shopify up so that Citigroup had to pay more. This is obviously a brilliant way for Ken Griffin and Citadel to offload their Shopify bags and make Citigroup pay more for the stock. That $100 was an increase of 13%, and therefore Citadel just made an extra 13% on their sale in a matter of seconds. And now the New York Stock Exchange has started a probe into Citadel Securities to figure out exactly what happened and why Citadel let the price run so much. It also says the trades have set off a blame game on Wall Street. It's not clear who the end buyer or buyers were, but the immediate losses would have been in the ballpark of around $18 million. Now, I also want to talk about AMC's current price action over the last few days and whether this is a sign of further continuation. Now, obviously last week we saw the run up from around $15 per share all the way to around $22 per share. On the Thursday and the Friday, the price stayed fairly stationary and actually pulled back a little. But obviously yesterday on Monday, the price ran up massively and had a brilliant day all the way to $29 per share. Now, this post was actually made a few days ago on Friday. As you can see on Friday, this was before the run up to $29. But actually we had the exact same move back on the 21st and 22nd of January 2021 last year. And therefore I do think that slight pullbacks or trading sideways is very, very healthy. And therefore if today we don't have another massive run up all the way to $50 per share or $100 or even higher, I wouldn't start worrying because I do think the pullbacks are healthy. However, so far in the pre-market this morning, AMC is already up over 4% and it looks like it's going to be another brilliant trading day for AMC. Obviously, I would love AMC to run to $50 or $100 per share today, but if that doesn't happen, I'm not going to be worried because I know that AMC has ran from $15 a share all the way to around $30 per share in the last week alone. Now, as Rico says, they can continue to lose money by fighting the price down, because it's very expensive to ping pong the price down and perform those short ladder attacks and reset their failed to delivers, their divorced puts and their married puts as well, as they have to find another party to take on the risk. They also have to continue paying that short lending fee. Yes, these shorts have been generating profits over the last few months by holding strangle options on AMC, which basically means that Citadel and other hedge funds make money if the price doesn't move up too high and doesn't move down too much and trades fairly flat. Again, they potentially would have also been making money on their put options, but right now they are losing out significantly with both their strangles and the puts as the price of AMC is running. And he said when you add on to that the interest, the margin calls, the losses on other stocks, just like we've seen with Melvin Capital, they are in big trouble. And he said once their liquidity runs dry and the big boys, aka BlackRock and Vanguard, want their shares back, then it's game time. Now, I also wanted to quickly dispel a bit of FUD. Tofik Faisal recently tweeted saying AMC is now at $26 per share. This is a sign that potentially or possibly some shorts have started to cover. Now, I wanted to say that this is FUD because shorts have definitely not yet started to cover. The short squeeze hasn't even yet begun. I don't even think that we've barely scratched the surface of the gamma squeeze, let alone the short squeeze. Obviously, for shorts to cover, they have to buy back their shares at the prices that we set. They can't buy shares if nobody in the market is selling, and therefore they have to push the price up high enough to actually convince us to start selling for them to cover their shorts. They can't just buy back 1 billion shares of AMC right now at $29 per share and not push the price up, because there won't be 1 billion shares worth of apes willing to sell at $30 per share. They obviously have to continue pushing that price up and gamma squeezing the stock until the apes are willing to sell, and at that point, then they can start to cover. I personally believe that right now, this is only the surface of the hedgies starting to lose control over AMC before the gamma squeeze then starts, which will take us over $100 per share, which then may be where the short squeeze starts, as there'll be many hedge funds that end up being liquidated and forced to buy back their shares, which would obviously push the price of AMC up until the apes are willing to sell. Guys, be sure to let me know down in the comments below what you think about Citadel creating fake accounts to spread FUD. And as always, guys, if you enjoyed this video, be sure to check out some of my others. Alternatively, subscribe to the channel and ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.